Welcome back to the New Equity Network show. I'm Michael Yorba, your host, broadcasting to you live from KBCE 1160, DFW's Business Authority. All right, in studio, I've got Sandy Pofahl, President, Commonwealth Companies, and Scott Axelrod of BayMountainCapital.com. All right, Sandy, come back into the conversation if you can with Scott. And I wanted to pick up, I think you wanted to start off with bird dogging, flipping, and then get into hard money. Where does it come from? How do you use it? What is the cost and things of that nature, right?
Sure. Flipping is a great way for an individual to initially get into the real estate market and make money. I have to smile at one of the last networking sessions. I met a lady who is a bird dog. Mm-hmm. And what she does is she goes out, finds a good property, puts it under contract in her name, and then she goes ahead and sells it to an investor. She is the owner of the contract. She doesn't have to be a broker. She's selling her own contract. She'll put it under contract, pick a number at $80,000 for the property, and then she'll go ahead and sell her contract for $5,000. She'll flip it and, sell it to the investor, her $80,000 property, and make $5,000. She can do that in 2 or 3 weeks. It's a great way of making money. And I said, well, how do you find your properties?
Right.
And she said, and I love the human mind, she said, I go to garage sales. And I talk to people there, and I ask about the neighborhood. And people will say, oh, so-and-so died or whatever else, and pick up properties that way. Another intriguing way is go to city inspectors. They see weeds in the properties and stuff. They know the properties that are having difficulties. Go talk to the city people. You're doing them a job in buying the house and getting it redone. So there's a lot of inventive ways that you can go find properties for sale.
Interesting. All right. Now, if we can bring you back into the conversation, Scott, we were going to talk about hard money lending and the risk associated with it, right?
Absolutely. Absolutely. Hard money was set up in order to bridge that gap between what banks will finance and just having to flat out pay cash for a particular property or investment. Basically, it's a high risk type loan. The lender is taking a very high risk because they're dealing with distressed properties, typically something that's in very poor shape that a bank simply will not lend on that asset. As a result, the cost is much higher than a conventional bank loan.
Mm-hmm. Give us an example of that.
Oh, on a typical commercial property, you're looking at anywhere, well, commercial or single family, really. Mm-hmm. The ranges can start at about 12% and go up from there. And that all depends on the strength of the borrower, the condition of the property, the loan to value. There's a number of different factors that go into that.
What's a normal time frame for you to get the money into the investor's hands for the properties relative to a normal bank?
That's another advantage to hard money. Banks typically take anywhere from 30 to 60 days, depending on the project. It could take even longer to obtain a bank loan. Mm-hmm. Whereas with hard money, typically we can move as fast as a title company can move. So we could literally close if you had a pre-approval from us, you found a property, we could close that property typically within a matter of days.
All right.
Well, let me ask you that. That's interesting that the term is 12% and above, but there are a couple other factors when you get a loan. One is the term of the loan. I mean, is it 3 months, 6 months, 12 months? So one is term. The other thing is points, the ubiquitous points off the front end. So tell us about points and the term on the loan.
Absolutely, Sandy. Depending on the type of property, if it's a single-family property, and also depending if it's a flip or a buy and hold, the range of time on the loan, you're looking at anywhere from 9 months to 12 months on the term. On a commercial property, a multifamily property, somewhere along those lines, it could be 18 months, and it could actually be even a little bit longer than that, depending on the type of property, depending on the type of rehab that needs to be done on it. And yes, there are upfront points. Again, that also is tied to the strength of the borrower, the strength of the property, a number of factors. And that can range anywhere from 1 point to 4 points, sometimes even more, depending on the type of property. And so that would be the cost getting into the loan.
You know, it's interesting. We've got interim loans, permanent loans, et cetera, et cetera. And at times, some of the really good companies come up with inventive products. But I mean, we go ahead, we get a short-term hard money loan, and then we need to go into a long-term loan, and we have to go through the whole loan procedure again. We got front-end points and everything involved with that. We touched base briefly, and it seems like you've got a new product that Bay Mountain is considering putting into the marketplace. What's that?
Actually, Sandy, thank you very much. It's there. We have it now.
Really?
Yes, absolutely.
Super.
It is called the Mini Perm Landlord Loan. Basically, it allows an investor that has the hard money with us, it allows them to convert it to a permanent, semi-permanent financing.
Super.
3, 4, 5-year term without having to go through the qualification process all over again. It's set up in the beginning at a 65% loan to value. That's the loan to value is based on the after rehab value. It's based on an appraised value once it is rehabbed.
Okay.
Are there additional costs for that, for going from one to the next? Is there, do they need to be previously established with you? What are some of the parameters?
It is only for experienced borrowers. It's not something that a first-time borrower can do.
Okay.
Or a first-time investor, I'm sorry, experienced investors.
Right.
The conversion rate is 1%. So they pay 1% to flip it over to the permanent financing. Mm-hmm. The rate on it is currently 7.5%. And it's an interest-only payment for 3, 4, or 5 years.
I've been watching the bond market in the futures, and they have been tanking. It's going down and down and down and down, which is a precursor to movements in interest rates in the mortgage industry. What are your takes on where interest rates are going and how this is affecting the business, of whether it's real estate growth and value or the cost of money to do business?
Well, as far as rates go, they're certainly at a historic low.
Right.
They really don't have anywhere else to go but up. I think it's just a matter of when.
Well, some of the people that I've been talking to are saying that this is going to add extra emphasis on upward movement in prices because people are going to be trying to capture that rate before it gets to the next level. Has that been your experience?
Yes, right now, that really combined, in the DFW market specifically, that combined with the area growth, with all the new companies that are coming in, all the new residential growth, that is driving up prices significantly in the residential markets.
Yeah, or on the break you were telling me that this market here in Dallas is moving at a rate of approximately 12% a year in value increase. Do you see that accelerating as we go forward?
Actually, going into this year, I think it's been it hasn't been quite as fierce as it was last year, but I think it's. My thoughts are it'll end up pretty close to where it was last year. So yes, the market is heated. People are there's multiple offers on all types of deals, whether it's distressed deals or your normal.
I was talking to somebody else a couple of weeks ago, and they put their house on the market, and within like 6-7 hours, it was sold, and that was the first offer, and they had 3 of them pop up right behind it. I mean, that's as fast as trading a stock.
That's very common these days.
I mean, relatively speaking. Okay, yeah, that's very common. I mean, how much hotter can it get than that? I mean, that's amazing.
And we're certainly seeing appreciation on the commercial sector as well.
What about that? Let's go into that. I mean, Sandy, you deal in that too, right?
Right, sure do. That's a very attractive area, although right now residential is much stronger, but retail commercial is doing well as well.
Okay, so residential's leading the pack, and that, I imagine that's the growth rate. Everybody fleeing these other parts of the country, coming here and needing a house to buy and finding better value here than you can say in California. I mean, you can get a shoebox for $1 million out there, and here you can get what? If somebody was to sell a $300,000, or no, actually a $700,000 house, which is low end in California, and come out here, what are they going to pick up?
4,000 or 5,000 square feet.
Okay. Really, you can get double the value here.
Yeah.
California is just off the charts as far as not really getting value. A lot of people are coming from California to here, both because of the state income tax. We don't have one where they have it. It's horrendous in California.
Right.
And the value of homes, they get double the value of home here than they come in California. That's why they're coming here.
Is it safe to say that this DFW market is really the hottest place in the country for real estate right now? Because I haven't heard too many other things.
I would say, in my personal opinion, yes. With all the new growth coming in, you've got Toyota coming in, Liberty Mutual, Kubota. I'm sure I'm missing one or two as well, but so much corporate growth coming in that rooftops drive everything, and that's just going to drive the rooftops, and that drives the whole economy.
So it's really, you got to work at it to lose money in this business is what I'm getting. Everybody wants to lend for it. Everybody wants to sell. Everybody wants to flip. The only thing is, how do you find the spread? How do you find the value that you can build into a trade on this, and then being able to move it? Is that what I'm getting here?
Absolutely. And again, it's the ubiquitous word networking. You got to talk to people. You got to get your input. You just want to meet those people that know what they're doing, buy them a cup of coffee, and learn more and more.
All right, that sounds good. All right, and from my understanding, Scott, you can provide that list to people to help them get into the networking of it. And
I would love to do so.
All right, one more time, put your email address out there, and if you've got a phone number for somebody driving by, so they can get in there and start getting their piece of it. Go ahead, Sandy.
And also, I have a list of sources as well. It is cfsandy@gmail.com. I'd be glad to share that with other people as well. So if you want to email me, I'd be glad to. Of course, Scott would as well.
All right, great. Sandy, we've got to take a break. Scott, thanks for showing up and availing yourself to our general public.
Thank you, gentlemen, for having me.
All right, my pleasure. You've been speaking with Sandy Pofahl, President, Commonwealth Companies, cfsandy@gmail.com, and Scott Axelrod, Bay Mountain Capital, baymountaincapital.com, or scott@baymountaincapital.com. I'm Michael Yorba, host of the New Equity Network show. Stick around. We'll be right back on the other side of this break.